looking at February stats, I think it's pretty interesting, but it carries on the story we've been telling for a couple months now that we are seeing the market picking up probably faster than expected. We had a bit of an unusual February.
Yeah, Brandon. I mean, if you look out the window today, it's a beautiful day and you can't see a bit of snow in sight. So, and that really feeds into what we were saying last month, where, if this continues, the weather continues to be a nice early spring, we're seeing it. People are putting their properties on the market. The numbers are up, listings are up this month. Number of sales are up. Months of inventory is down. We've dropped from 3.1 to 2.4 this month. It says the activity's out there. And, from a realtor perspective, my team has been busier. We're getting multiple offers on properties. But with that said, the buyer is still, it's like a kid in a candy store, right? They have their nickel and they want to spend it, but it's like, I still want the best candy for my nickel. I'm afraid to buy this one because what if there's a better one over there, kind of thing, right? So you're getting multiple offers in that, but it's still a little bit of hesitation and wanting to make sure that they're making the right decision.
I want to pick up on the thread about the nickel just while I'm thinking of it. The nickel doesn't go very far anymore. And for a while, we were saying that's what was stopping buyers from hitting the market, but they're coming in spades. We're seeing this across really all price ranges, that homes are selling close to the sale price, if not over the sale price. Are your buyers feeling more confident? Is inflation not hitting them the way it was? Do you think things like the Bank of Canada holding the rate again this month will impact what we see through the rest of March?
Yeah, definitely echoing your sentiments, and people are definitely coming in off the sidelines. They are those properties that they've been looking at and looking for from a buyer's perspective are finally coming up on the market. It is ultimately a problem of affordability still. Many people are just trying to get into that sweet spot that they can actually afford and find that ideal property that they can afford within their pre-approval price range. So as we get further sentiment of rates potentially going down in the future, people will buy with the anticipation of that happening, and their pre-approvals will adjust accordingly.
I think it's a really interesting point, Paul, speaking about rates and rates coming down and the affordability challenge. And this is something we've been addressing a lot in the recent months and years even. We've been advocating. You've been a big part of that as a volunteer here at OREB. How do you see rate changes or even just increasing confidence impacting the market if things don't change, if we don't have more homes to sell? What can Ottawa expect?
So obviously there's always two sides to a transaction, buyer and the seller. So as rates come down, sellers will adjust their expectations and expect a higher sale price for their property, and buyers are going to be expecting a great deal nonetheless. So we're consistently, due to this low inventory, going to be battling a front of buyers wanting a lower price and sellers wanting a higher price, and finding that middle ground is the paramount job of what realtors do in our marketplace. And it is a tight squeeze for any buyer to purchase a property, especially first-time buyers or those upsizers, because they're feeling every penny right now with the cost of goods being so expensive and services being so expensive. It's tough for many people to get by on a day-to-day basis, and increasing that mortgage payment by an additional $400, $500 a month. Sometimes it's just simply not feasible for people.
Bringing back a little bit to the board, we know firsthand that the demand for housing is up, and our market activity has consistently showed us lack of affordability and suitability of housing. So what are you guys sitting on governance? What are you guys doing to help in the Ottawa area?
Yeah, so from the government and community relations perspective on our board, we do a lot in terms of advocating for homeowners and consumers overall in our marketplace. So we have conversations with our city councillors, with our MPPs and our MPs to discuss the impacts of this housing crisis that we're in, and different possible solutions. So we consistently meet with our local representatives and try to bring them a toolbox of solutions so that they can really tackle the issues that they have at hand within their communities.
And to build on that, I'll mention the Housing Accelerator Fund money that we're getting in the years to come, much to the work of the Liberal government and our city council and certainly Mayor Sutcliffe. That's going to be a really, really healthy in addition to the supply that we need. Look, we're missing the missing middle housing. We need the townhomes. We need the entry-level homes for new buyers that fit the demographic of people looking to buy homes. I expect you may be seeing it. Probably a lot of your new clients are younger. We know here in Ottawa, and I think the same is true across many cities, at least in Ontario, we're losing young folks because they can't afford homes. And we need those tradespeople. We need that work. We need those families to support the tax base that we have. We need innovation. We really need innovation. We need gentle density. We need better infrastructure. And just a better process, a better zoning process. And so here at the Ottawa Real Estate Board, we're at the door trying to help however we can, whether it's from data or policy perspectives. We just want to ensure that Ottawans can get the homes they need for their families.
Seeing that the metrics are up across the board, what can the realtor do to really help that buyer secure that property? What are your thoughts there, Paul?
The value in using a realtor in a competitive marketplace like this is really just understanding what the market's doing, where it's headed, what the key indicators are, and allowing that buyer, that seller, to really position themselves in a way that they're going to win and that they're going to be able to navigate in this type of market. It is a very complex market that we're in, and due to the lack of housing, it's very important to partner yourself with a qualified realtor in your area, so that way you can take full advantage of the services that a realtor offers, and the guidance and the expertise that they have been trained to provide you with.
Yeah, so guys, let's look at that impact report from last week, right? It the number of homes in Ottawa that under 500,000 dropped from 79% to 19.2 since 2013. I don't think we're really surprised about that, but that just shows, that first-time home buyer, what's out there for affordability. You lost a major segment of that market, and you go up to the over the $1 million price. There's 10 times of the percentage of homes over $1 million than there were 10 years ago. That's just staggering numbers.
Looking at the first-time home buyers option, they're very, very slim. They're either going to be purchasing a townhome or an entry-level townhome or a condo, and they only have access to about 20% of the market.
And I think importantly, when we're thinking about affordability, when we're talking about $500,000 homes, that's a pretty decent starting point. That's still a pretty high mortgage at rates right now. Those are pretty high payments. They're competitive with rent right now in a restricted market again. But those numbers don't come down, right? Your home's not all of a sudden going to be $900,000 and in 3 years it'll be $500,000. That's not likely. Certainly not with the level of demand we have and the lack of supply. And so the challenge is, how do we address the affordability challenge without addressing just the demand side solution? And a demand side solution would be helping first-time home buyers get a home. Certainly it's something we should be pushing for. However, if we give an incentive to first-time home buyers, it's just going to get capitalized, right? Your clients all come from different backgrounds. They have different wealth available, different financial tools available, and they're going to capitalize them to get the home that they need. And so until we have the supply balancing out, any measure we do to make housing more affordable through financing measures, for example, is really just going to be eaten and is going to feed into sort of this beast that is a very demand-driven market.
Let's talk a little bit about advice for our fellow members out there. We're seeing the market change, and for months now we've been on that theory that when we're looking at comparables and that we're making offers or listing properties, that we're kind of looking back at that 2019 number, 2020 number, before we had that crazy boom. But I feel that's changing. I think if you're just looking at those numbers right now and thinking that you're going to secure a property, you're going to list a property at a proper price, I think you need to really look at what's happening and adjust for that. For a bit now, I've been finding that buyers are thinking that they're going to lowball properties and they're going to secure a great deal. That's changing. It's, if you look at it, though, it's just not happening. And now that you're seeing the multiple offers and everything happen, members really are going to have to stay on those stats numbers and watch what's happening, because this, I feel, is going to go quite quickly. Like we see it before. I mean, overnight prices shot up, and it was like, what is happening? It was a shock to all of us how fast it went. And I think right now we're in a position that could likely happen very quickly again. And if we're not staying on top of this and watching those numbers and how the market is moving so fast, we could get ourselves in a pinch.
Yeah, I'd say in terms of our members, I would strongly suggest looking at all of our stats and being close to the figures in order to provide that legendary advice to your clients, and really provide them with not the present valuation, but what's coming and how to prepare best for their situations in the upcoming months and the upcoming years.
Yeah, I think in the next few, it's going to get harder and harder to look at the past 12 months as a comparison to what's happening in the market today, because I don't think that is going to be a true reflection of what we're going to be dealing with moving forward. I think we went through a little bit of a period of a little bit of a slowdown there, but I think that is going to change. And if we as realtors, hang our hat on that slowdown and we're really looking closely at those details, we may not be servicing our clients to the best.
Totally, yeah. And OREB members have access to all that information and all that guidance from their board, and I think it's paramount to really advise their clients and really push them in the right direction. There's so much information out there, and as a realtor and having access to all the information that we have on the board level, it's really important to really guide that conversation and provide your sellers and your buyers with the right information, so that when they're ready to make a move and when they're ready to make a decision, they have you as that trusted expert.